Well, it's crypto. Simplistically, it just outperforms all other assets, even with the excess volatility. So Bitcoin, for example, produces since 2012, it's produced about 145% a year returns. So that's 10x the stock market. And that's including 3 70% drawdowns in the middle of it.
A drawdown being a drop.
Yeah. Well, you feel like you've made the biggest mistake in your life, and it recovers and it keeps going because it's a technological network adoption model that's happening. So there's now 650 million crypto brokerage accounts in the world, which is more than all the stock market brokerage accounts added together in the world. And we're seeing it all around the world because everybody can buy a share of something. Everybody can buy a fractionalized share of Bitcoin, which is, in theory, a $100,000 asset. But we can all put in $10, $5, $1,000, 10 billion.
Crypto has outperformed traditional assets, with Bitcoin staying resilient through major drawdowns. Its adoption is spreading faster than the internet, cementing its role as digital collateral and a global financial layer. Raoul sees the next cycle as transformative, fueled by currency debasement and macro shift. He expects institutions to drive crypto into a multi-trillion-dollar market, far beyond past speculative runs. Looking ahead, Powell believes blockchain will anchor a new financial system and even power AI-driven value exchange. He stresses that volatility is natural, but patience and a long-term view are key for investors.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
We've been given the gift of the greatest performing asset the world has ever been given. That's not just Bitcoin, it's the crypto complex. If you're very careful in investing in like top projects, you can even have a broader diversified portfolio of that. Like you've had Ethereum, Bitcoin, Solana, Sui, all of these things, great. They will definitely outperform for a period of time. And that's based on macroeconomic factors, which is the debasement of currency, which we've talked about. That means all of these assets go up by a certain amount and some outperform it. The only two assets that outperform the debasement of currency is the NASDAQ and crypto. This has been a persistent trend that is observable and measurable. So this is not a speculative asset. What it is a Metcalfe's law adoption model. Bitcoin is the adoption of, let's say, a money or collateral layer, like gold, digital gold we'll call it, while the rest of crypto is the new rails for the internet. So it's a technological investment. It is growing at twice the speed of the internet in terms of adoption and has been since the first 5 million IP addresses for the internet and the first 5 million wallets. Twice the speed of the internet makes it the fastest adoption of any technology the world has ever seen, aside from AI now, which is now outpacing it.
If we sit here in 20 years' time,
yeah,
and you were wrong,
yeah,
what happened, do you think?
Well, firstly, in terms of investments, you have to always, once you have a high conviction bet, your entire job is to question yourself, not to keep reaffirming yourself. Sure, you end up reaffirming by questioning and then you figure it out. For it not to have been true, what would have happened? The AI would have had a new system of money that it created. There has to be a competitor to this. This is the risk reward that people don't understand. If you've got a time horizon, let's say the average drawdown in the S&P during a bear market is 25%.
A drawdown being a drop.
Crash. A lot, yeah, a drop in prices. You're getting compensated 15% a year returns for that, at best. In Bitcoin, the average drawdown over the same period will be about 70%. But you're getting 150% return.
If you're on the winning side, though. If I buy it and I can sell it for a higher price.
Just hold it.
That's the key.
All of these are in a nice trend channel. They go up. So anybody can buy something and hold it long enough, it'll go up.
I think the part that we fundamentally differ is not that there's value in crypto. I own crypto. But the difference between you and I is you are all in crypto. For me, it's a speculative piece of my portfolio.
Imagine how difficult to replicate what you've achieved in your amazing career is for the average person listening to this versus buying one thing in your Coinbase account, your Robinhood account, and doing nothing. There's no cost, there's no debt involved, there's nothing.
So Bitcoin, you're saying, is 145% a year.
Yeah, and in recent years, as the trend rate of adoption grows, it's probably down to about 100% a year. Let's call it that for easy maths. So even if I'm wrong by 50%, you still outperform Buffett. To put it in perspective, Bitcoin since 2010 has done, I think it's about 90 million % returns. There's no asset in all human history that's ever generated as much wealth in the shortest period of time. And because it's not a random thing, it's actually a technology, and it's a network model of technology. As more people use the network, and we see with Bitcoin, governments buying it and asset management firms buying it, and everybody else, you have this network adoption model. And so what it creates is the same chart as Google or Amazon, all of these. It just goes up in a log trend over time with some volatility. So you've got a secular bull market, which means that over time prices go up for measurable, understandable reasons. And it happens to be the highest performing asset of all time. And it's volatile. The psychological thing you're dead right about, it's very hard when it falls 70%. I've gone through 3 of those, they're hard. The most important part of financial markets that's the least understood is time. It's not just price, it's time. So if you're 25 years old and you get wiped out, we've all done it. We've all kind of screwed up and, had to move home to our parents or do whatever. We've all done it. You can do that several times when you're young and it's okay. You just don't want to do it
at
when
age
you're
50.
At age 50.
Sure.
You really, really don't. You become more risk averse, generally speaking.
Okay.
So it just depends where you are and how much time you've got to take that risk. Really speaking, people should have the ability to have cash flow or cash for if things go wrong, right? That's really a super important thing, to be able to have a long-term view, to be comfortable with drawdowns, to be able to invest in startups or to invest in crypto or technology and all of this stuff. That makes sense. But I just don't think a dividend at 4% makes any difference to anybody.
Bitcoin and crypto are rapidly growing, with institutions preparing for massive capital inflows. Raoul Pal sees the next cycle, fueled by macro shifts and liquidity, as a turning point for digital asset. He believes crypto will become the foundation of a new digital economy, urging investors to stay patient, embrace volatility, and think long-term.
But if you're not starting with a lot of money, your strategy is the strategy of a rich person. Oh, I've got houses, and I've got dividends, and I've got some gold, and I've got a bit of this. That's the strategy of being rich.
But I didn't start with all of those. I didn't start with all those at all. I started with one.
Where did you make most of your money? Being an entrepreneur. What were you doing? Taking obscene risks.
I did. That was me.
An entrepreneur is taking obscene risks. We don't even know what the value of money is when we go into that world. So I've talked about this before, the economic singularity, past 2030, the economic model breaks down. So the economy generally grows by a measure of population growth, how many people are in the economy, or coming into the economy or being born, productivity, how much output they create, and then debt growth is the other lever. So the rate of change of population growth is shrinking. So you've got this slowing economy. GDP growth has been slowing over time. Productivity, old people make less things. So it makes less economic output. So we've got this mess, and then we've got this debt, and we stopped that whole engine in 2008, and we need to service this debt. So, okay, so that's the system we're in, and this is why we're printing money to service this debt, because we're not generating enough output in the economy. But after 2030, this population part changes. So what does that do for the multiplier of that formula, population growth plus productivity growth plus debt growth? It breaks, because you can have 20% GDP growth because you've had a huge rise in the number of AI agents creating economic activity and robots.
And so what does that mean for me as an average person?
For me, it's like the economic system starts changing. We get to this world of abundance. We don't know what has value. What we as humans do, we change and retool to become more humans, because AI and robots can't be humans. So we have to figure all of this stuff out. Investing, we were talking about this earlier, is like, well, does the AGI, is that going to be a better investor than any of us? Yes. And we're very close to that. So in which case, well, how do markets work? And when businesses are agents selling stuff to other agents, where do we play a role? So all I'm saying is, my job, my whole life has been to look into the future, sort of 10 years out, and try and probabilistically understand paths. Here I get to like 2030, and it's like a dark curtain.
Just to flip that for a second, how could AI actually positively influence your hypothesis?
I'm very positive about AI. I think humanity will come out of this just fine. I think economic growth that explodes is we can work a way of accreting it to humans or society or whatever we want to do with it. So I'm not an AI doomer.
Specifically on Bitcoin's value and price, how could AI make it even more important
Well, in the end, an AI is it requires two inputs. It requires, it's Maslow's hierarchy of needs is basically two things, compute and energy, and it needs to be paid. These agents you can't build all this agents of billions of agents running around doing things without paying for them. And agents will use agents. So one agent will get another 10 agents to do all this task. They're all going to have to be paid. And the way of doing that is using crypto rails.
Stablecoins.
Whether it's stable coins, whatever it is, but that whole crypto rail, all of this new
blockchain.
infrastructure for the internet, the blockchain, that's where it works.
Bitcoin and crypto are growing fast, with Raoul Pal predicting the next cycle could push them into a multi-trillion-dollar market. Despite volatility, the long-term outlook remains strong as adoption and institutional interest rise. He believes blockchain will shape the future financial system and even connect with technologies like AI. Patience and a long-term view are key for investors. Do you think crypto will drive the future of finance? Which altcoin are you most excited about? Let us know in the comments.